please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, there goes the bell. 63, 67 down, 70 down on the Nifty. That's 11,440.
My sense is what you saw over the weekend was just a start.
It's turning out to be a tough start for the week this Monday.
The Sensex has now extended its cut to about 470 points almost. The Nifty is down 130.
The Nifty Bank is still down over 300 points. The Nifty itself is down over 100. And some incremental pressure on RIL.
All in all, bad day, you'll have to say. Of course, there was a gap down, and from there was not too much traction. But still, 145 points down on the Nifty.
Broad emerging market weakness due to fresh tariff trouble between the US and China keep key indices under pressure. Sensex stumbles over 500. Nifty gives up the 11,400 mark.
The rupee continues to weak despite the 5-point plan from the government, touches a low of 72.67, falling along with other emerging market currencies. IT stocks may hay thanks to the rupee weakness. The IT index was one of the few indices to end in the green, clocking gains of nearly 0.5%.
Private banks and financial stocks under pressure after bonds sulk despite Reserve Bank announcing purchases of bonds. Axis, HDFC Bank drag the Nifty Bank, while the Bajaj twins lose more than 2%, heralding fall in NBFC stocks.
Midcaps end the day in red, still managed to perform better than other key indices. The IL&FS Group stocks gain over 13% on hopes of some support from the Life Insurance Corporation of India. Sugar stocks also rise after ethanol price hike, with Uttam Sugar, Rajshri Sugar, etc. leading the surge.
Lower crude oil prices and government's willingness to allow regular fuel price hikes push up oil marketing companies higher in trade. Meanwhile, steel stocks like JSW, Tata Steel and Jindal Steel buck the trend to end in the green. Well, those were the top 5 headlines from a day when indexes went from weakness to weakness. Hello and welcome to Markets Today Talk Back, the show where we tell you all about the 6 hours of hectic trading in 5 headlines. I'm Lata Venkateswaran. With me, my colleague, Prashant Nair. Hi, Prashant.
Hi, Lata. 2 days up and another big day down, right? I mean, absolutely. 150 points down on the Nifty by close. As well, over the next 30 minutes, we will talk about markets, we talk about the rupee, we'll tell you the stories which defined the day. Joining us today are our experts, Ashwini Gujral on the charts, Gavin Friend from National Australia Bank will be with us to decipher what's happening as far as emerging markets are concerned. And we also will be joined by Nishchal Maheshwari, who is with Centrum Broking. But before we go across to our guests, let's really paint the picture in terms of what happened today in trade, how we opened, the cues that we paid attention to, and finally closed.
Well, we opened gap lower. That was a bit of a disappointment for the government because of that announced steps to shore up the rupee over the weekend. And there was a firm commitment from the Prime Minister saying no reneging on fiscal deficit. But no, it didn't impress the rupee market. It didn't impress equities. Equities largely because Asian EMs, emerging markets, were in a spot of bother after both China and US appeared to talk tough during the weekend. Equities actually ended at the lowest point of the day. That's the disappointment, by the fact that the rupee recovered at several points and was off its lowest point for a goodish bit. There were regular announcements from the government every time the rupee appeared that they will impose import curbs or that the CBDT, the direct tax collections were very good. Despite all these internet announcements, the rupee recovered, not stocks. The big drag was financials, NBFCs and banks, and I can understand because bond yields are obviously under pressure when the currency goes weak. Reliance was another sore point for the heavyweights. Equities perhaps are going to be reassessed in the light of the foreign currency, the FX cheapening, in the light of bond yields tightening, and in the light of fresh import curbs that may come. So people don't want to take positions perhaps till they know who will be the winners and losers of these policy and macro changes. So you tell us stock-wise.
So actually advanced decline wasn't that poor for a market which was down 140 points. I mean, 1150 odd stocks lower, 950 stocks higher, so not really polarizing in that sense. But sectorally, pharmaceuticals were lower, FMCG was down, and the PSU bank index were down. So big spots of weakness. By the way, this rupee depreciation led gains in pharma and IT. I mean, that relationship seems to be not that straightforward anymore. Pharma was actually one of the top losers. IT was one of the very few gainers. Could also be, a lead lag. IT has done much better than pharma this year. So maybe there is some some piling on which is happening there. So real estate, IT were the two gainers. Top index losers, Titan, Sun Pharma, there was Bajaj Finance, Bajaj Finserv, as headlines also pointed out. Tata Motors was down big time, and then there was HDFC Limited and Reliance Industries, which continues to give back. So this pullback is continuing on RIL. Large cap gainers, BPCL, HPCL, IOC, so the oil marketing companies did very well. And we'll discuss that in a bit more detail later. Tech Mahindra from the IT pack was also higher. Broader losers, insurance. I mean, maybe there is a specific issue here, or it is essentially about equity markets taking a bit of a hit, and some of the insurance products as a result seeing some damage over a period of time. But SBI Life, ICICI Pru, even general insurance companies like ICICI Lombard were top losers. Bata India, Voltas, Future Retail, Mahindra Financial Services, L&T Finance were the other big losers. A lot of finance and NBFC kind of names there. In terms of broader market gains, sugar across the board. So Balrampur, I mean, you actually pick any sugar name there. Then there were names like Oracle, which actually did very well. Praj, Avanti Feeds, big name, large volumes today on that one. Sonata Software continues to go from strength to strength. BSE was looking very good, and Shankara Bilcon and something like a Lemon Tree did very, very well. So, as I said, there was enough to find on the gainers list as well, because even though the Nifty was down 150, market breadth was quite okay.
Yeah, the mid-caps didn't fall as much, and there was this sweet spot in sectors like sugar. Okay, let's now invite our guests. First, to you, Ashwini, our technical expert. A big 140-point fall on the Nifty. What's next from the markets?
Basically, after a decent big fall, the market now probably wants to consolidate, and so does the rupee. And you go through a pause after large moves where the market reassesses what is the next direction we should be taking. So my sense is that the way rupee has strengthened today and possibly could get back towards recent highs of about 71.50 odd, you could have a day when the banks do well and IT comes off. So in a sideways market, each day could be opposite of what the previous day was. So that way, it's not a market that you need to chase the gaps, etc. A lot of the times the gap will be the high or the low of the day. So that way, I think some more sideways consolidation, and then we should make our fresh move. Overall, the direction remains down, but we may not immediately get that direction.
Okay. Well, Ashwini, stay on. We have another guest with us. Let's go to Gavin Friend, who's joining us today with his strategies, National Australia Bank. Gavin Friend. Gavin, what's your sense? I mean, emerging markets will take a lot more fall before you find them attractive?
Yes, good afternoon. Well, I guess, I mean, the trigger for this latest round today, I guess, was the weekend press reports, the Wall Street Journal and the Washington Post, suggesting that Donald Trump will roll out the next run of tariffs, 10% on 200 billion Chinese exports to the US, after we know that the consultation period on these discussions ended, a couple of weeks ago, and the press reports is that he will push these tariffs on sometime between now and the midterms, obviously early in November. And then, of course, we know that there's a further threat if China were to retaliate there, that there's a further $260 billion worth of tariffs he could put on. And I guess, this is causing, the unease. It certainly is the case at the moment that Trump feels, you just look at his tweets, he feels in fairly sort of ebullient mood. He feels that the US economy is doing exactly what he wants it to do, thanks to his big tax cutting and reform program. And at the same time, you look at relative growth levels around the world, and then you look at what's going in stock markets you're just talking about now. The US stock market looks to be in rude health, again, thanks to his policies. Sure. And yet Asia is in a world of pain. And, it's difficult to see that is going to come to an end until we get some sort of resolution to the trade tariffs, which are going to go on.
Yeah, Gavin, over the weekend, the Indian government tried to announce some steps, some easier external commercial borrowings, more foreign investment in Indian bond paper, corporate paper, as well promised at regular intervals that there will be import curbs and maybe some export promotion. Is all this mattering at all, or will India just continue to get clubbed as an EM and fall with the EMs?
It's a great question. And if you look at some of the idiosyncratic issues that are going across EM at the moment, I mean, we are starting to see something of a fight back. So in addition to what the Indian government has said today, you've got, Russia raising rates last week. You've got Turkey raising rates double what markets had expected to do. Down in South America, Argentina is talking to the IMF, thankfully, now. And so a lot of these idiosyncratic issues, there are some very tentative early signs that these countries are starting to take measures to address their sort of independent weaknesses. But of course, markets know this, and markets are lining up the victims. Those countries that have, as they see, weaker economic fundamentals, whether it be current account imbalances or reliance on foreign capital inflows, they're lining them up, and they probably won't stop that pressure until and if there is a resolution to the US trade tariffs, and that probably isn't likely until, well, who knows? It's going to go on for some time yet. But having said that, there are some signs of some investors looking at some of these things and saying, well, they are cheap on a relative basis, and starting to think about whether they should enter the market.
Okay, well, then that's my point, really. The rupee year to date is cheaper by about 13% compared to the dollar, that is. And stocks are off, what, 5% from recent highs? So a Reliance, a TCS, I don't know how many of these stocks you follow. They're all coming 13%, 15% cheaper for a foreign investor. At some point, do you see the tide turning and people coming in and buying India?
Sorry, is that for me?
Yes, for you.
Yes, well, I mean, indeed. But as I say, until you start to see, I mean, let's look at this. The global economy is in pretty good, health overall. We're looking at something like 3.7, 3.8% global GDP this year, which will be, above the kind of 25-year average, and that's a positive. But we do have this issue with trade tariffs, which won't go away soon, and until you get through that, it's unlikely that investors wholesale, they'd much rather miss the first few percent and make sure the tide has turned rather than to get in early. When you mention something like, your local stock market is down 15%, when you look at you look at your currency down 13%, that is no different to a basket of EM currencies. Okay. EM currencies against the dollar are down about 12 to 13%. This year so far, or over the last few weeks, since the dollar really started to push higher back in April. And so there's no difference there from any other emerging market. And as I say, I think, we need to see confidence from the other side, and that would, come through from the end of the Trump tariffs.
Fair point. So unless they smoke the peace pipe, these big guys, this is going to be trouble for us. Thank you very much, Gavin Friend, for joining us. With that, let's move over to the second headline.
Oh, absolutely. Rupee continued to weaken today. So disregarded the government's 5-point plan to stem the currency's fall. So the rupee touched a low of 72.67 this morning, falling along with other emerging market currencies. Meanwhile, technology stocks made hay on the currency weakness. IT index was one of the few indices, actually one of the two indices across the board, which ended the day in the green. So Lata, rupee, any thoughts?
Well, clearly the government's announcements and crude fall has not impressed the market much. And you saw the big gap down opening, almost 1% lower at its lowest. Every time the rupee recovered because of some announcement that, they collect very good direct taxes, or that they're looking at import curbs, the rupee did recover. But at every point, there are sellers of the rupee, that is, or dollar buyers, actually, importers who are absolutely hungry for dollars and petrified that in 3 months they have to pay 73, probably 73.50, and therefore at every minor dip, there are people, with a huge and voracious appetite to buy dollars, and that could be also hurting the yield market, despite the fact that RBI promised to buy bonds. You saw yields rising. Clearly, they are reacting to the fact that if the rupee is going down towards 73 or 72.90, a lot more things are going to get expensive. And the RBI may be constrained to raise rates just to keep imports from rising, just to curb aggregate demand. All that working against bonds and therefore working against bank shares and NBFC shares.
Let's actually, thanks Lata for that. Ashwini is with us. Ashwini, just a quick word on technology stocks. One of the few sort of indices, two indices which actually ended the day higher. How are they set up now, or you think here also people will start to look profits, start to book profits?
Well, they are relatively outperforming, but you know, once people are done selling the financials, what do they have to sell next? So that way these stocks are becoming a little vulnerable. It's unlikely that they keep diverging from financials for all times. Even today, if you see, a lot of them came off, the mid-cap IT came off, etc. So somewhere, if you know, there is a financial, there is a sell-off by FIIs, finally they'll only have IT left with them. So these stocks also beyond a point may not be able to outperform.
All right, Ashwini, with that, we have to go to the third headline. Private banks, actually even corporate banks like SBI and NBFC companies were under serious pressure. That's because bond yields refused to fall, like I said, despite the RBI announcing that it will buy bonds in what's called its open market purchases. So Axis, yes, HDFC Bank, all of them dragged the Nifty. SBI too was lower, though it's not a bank Nifty heavyweight. NBFCs had a very rocky day. And, you know, the probably never say die Bajaj twins also have been consistently falling. And today, down 2% apiece. With that, let's invite Nischal Maheshwari of Centrum into this conversation. Nischal, thank you very much for joining us. Well, first up, you know, the manner in which the bond yields have risen. What is your take, Centrum's take on NBFCs?
So, afternoon, Lata. I think we have been positive on NBFCs, and obviously, I think in the last 2 or 3 months, these stocks have really underperformed. But having said that, I think most of these NBFCs seem to be now coming close to a good value zone, given that most of them have been growing pretty well. So if I look at most of these stocks, they have corrected by around 10 to 15%, and given that they have been showing strong growth of around 25-30%, I think some of these stocks are showing good value. So I think one should start accumulating these stocks again around these prices.
Okay. Well, we have lots more questions for you, Nischal. Do stay on. We have to take a mandatory break. We are coming back with more headlines from the market and more opinion from our experts.
Okay, welcome back. You're still with us here on Markets Today Talk Back. We've been running you through the top stories of the day. We got through 3 of them. And here's the fourth story of the day. Midcaps ended the day in the red, but still managed to perform far better than key indices, the Nifty and the Sensex. The IL&FS Group stocks bounced back in trade, gaining more than 13%. This comes in hopes that LIC may lend lend some money to the cash-strapped company. Meanwhile, sugar as a sector continues its march higher. I mean, the latest trigger, of course, has been the fact that ethanol prices have been increased. Approval has come through from the government. So all sorts of sugar names, Balrampur, Uttam Sugar, Rajshri, Bajaj Hindustan, were up anything between 10 and 20% each. We are discussing the stories with both Ashwini and Nischal. Nischal, your thought, I mean, have you, by the way, looked at what's happening with these sugar names? Any thoughts at all? Because this seems like a restart of that uptrend, which was brutally crushed earlier.
Unfortunately, we do not cover the sugar names basically, so I've not been following this story. So I don't have much comments on this here.
Well, Nischal, generally mid-caps have underperformed, though today they were minor outperformers. Is there any stock or sector that has become now attractive for you all? Are you all already out with a shopping list in the mid-cap space?
Yes, Lata, I think there have been a few sectors basically which have been pretty decimated. Building products is one of them, which I've highlighted to you earlier on your channel. And I think some of these stocks are real value now, basically, whether it is the Kajaria Ceramics or the plywood, Century Plywood of this world. I think building products per se as a category seems to be in a good space. They have corrected quite a lot. The demand on the ground seems to be coming around, and they are beneficiaries of the GST moving from unorganized to organized sector. So I think that seems to be a good space basically to invest in. Again, I think some of the metal stocks basically in the mid-cap sector, the users of metal, the consumables, that seems to be in a good space basically, given that the metal demand continues to be very strong.
Okay.
So the likes of Vesuvius and all, I think that is a good space to be in. So I think these are some of the good mid-cap stocks basically which are there, and over and above that, I think the EPC companies, the construction companies, record order books available at around 8 to 10 times. I think that's another good space to be in. So I think this is a good time to be going out and looking at a list of mid-cap stocks.
Okay, Nishal. So keep your shopping list ready is Nishal's advice, especially in some sectors. The last story, the last headline today: lower oil prices and government's willingness to continue to allow regular fuel price increases helped oil marketing companies. The OMC stocks were high in trade, IOC, HP, BP, all of them. Steel stocks were the other pack, JSW, Tata Steel and Jindal Steel and Power, which continued to try and bounce in otherwise pretty downbeat kind of a market. Nishal, any thoughts, especially steel? The way the stocks have been behaving, attempting bounces even on a day like today. Your thoughts?
So on steel, what is happening is that the China plan for cutting the production, given that they are around the corner as far as winter is concerned, the Chinese cut in production is on schedule. So I think that is what is leading to the demand and the rise in the steel prices across the world. And in this quarter, their Chinese production would be cut down. So you would see a healthy demand and a cut in production in the Chinese side, and I think that is leading to a good price increase. Secondly, with the depreciating rupee, I think given that there is a price parity as far as the metals is concerned, I think prices domestically should be looking up given that the rupee has depreciated. So these are two factors basically which are driving the steel prices up. And so the steel stocks have been on a good wicket in a falling market.
Okay. One quick last question to you, Nishal. What would you say is a likely bottom for this market? When I say market, I mean just Nifty. Can it go below 11,000, you think?
Lata, I think there is a fair possibility if rupee continues to be in on a downward trend. Then definitely we see that the market may bottom out somewhere around 10,400, 10,500, but I think there should be a good valuation support. And around the corner you are coming with the third quarter results, and those results once again seem to be in good shape. So I think somewhere around another 1 or 2%, 2 to 3% down from here, I think the market should be on a solid ground.
I know these are easy questions to ask and tough ones to answer, but that's encouraging if you don't see too much of a fall, but worst case, of course, could go to 10,400. But I guess SIP is the way. Thank you very much, Nishal and Ashwini, for joining us with your thoughts, and I'm sure viewers are hanging on to everything you all are advising. That we wind up this edition of Markets Today Talk Back. It was a very important day in the markets and, of course, a tough one for the bulls. We'll be back early morning tomorrow.